Hi and welcome to the Market Alert for Monday the 5th of August 2024. Japanic Monday, Japanese bond stocks halted after plunging into bear market as everything crashes everywhere. Things are breaking everywhere. This is a follow-on from Friday. This is the latest news. This came out at Monday, as you can see there, 1:48 a.m. and that's US time, not local. So, yeah. Japan is having a bad time. Markets have plunged as the carry trade unfolds, and also obviously other issues, geopolitical, etc. So the market has been halted for a short period, and prices have stabilised at the moment. So Nikkei, biggest two-day drop in history. That's Thursday and Friday, and that's carried on after the weekend as well. Broken markets in full panic mode. Buy protection when you can, not when you must. And stocks and dollar sink while treasuries soar in the face of US growth fears. And also recession triggered payrolls miss huge, up just 114 as soaring unemployment rate activates SAHM rule, whatever that is. I don't know that. Anyway, recession and disaster there as the payroll numbers came out on Friday. You can see there 114 when it was forecast at 176, so it's the market's moving slightly lower. And US dollar, we'll look at this now on Friday, they're moving lower and also lower again on the overnight there. Right, let's have a look at the rest of the markets and let's kick off with the Dow. So the Dow on Friday moving lower once more. You can see we've got some support just across here if the market needs to find it. There has been a bit of support coming into the market overnight as well, which you can see there. So let's have a look at the 30-minute chart. Friday, the miss with the non-farm payrolls, and also what was happening in Japan. If we just have a look, we'll see that the market from low to high to the close. Again, 780 points there, drop for the Dow. So things are not looking too good at the moment, holding at the moment above Friday's low, but if we break this then expect further declines. Also note how we've managed to bounce off this for a couple of tests there in the 30-minute chart. In the German DAX, this heading lower as well. You can see there we've got these lines that are drawn in here. If we just have a look, see where they go back to, just squeeze the chart up a bit. So yeah, we can see the low over here. This was on the 19th of April. So we're back to April lows now for the German DAX. A very important level this then. So let's just bring this over and also draw in a line there. So we've got some targets, and let's just spread everything out so we can see what we've got. So yeah, the target is 17,403. So 17,400 is what you want to be looking at for this market. Obviously breaking down as well. Everything seems to be going pear-shaped, doesn't it? As I've said for a long time, it feels like there's something big coming, and maybe this is just the start of it. So we've got carnage in the UK with uprising and protests, etc. It's not just here either, it's just not being reported elsewhere, but across the whole of Europe. So it's not looking good either way. And then the Middle East is blowing up as well, no pun intended, of course. So yeah, 30-minute charts, we're already through the low in Germany, so that weakness is there. The 20-bar moving average holding this sell-off there as well at the moment. S2 is also in place. Watch for the S3 though if you get a bit of a sell-off. Watch down to this level, and certainly that 17,400, which the market is approaching there at the moment. You can see that line there. There's the red line there. So watch this just to make sure that the market holds. If it holds at this level, then there's a chance of it bouncing back to the low. Depends what it does when it gets back to the low. It may even just find a bit of support and then sell off again, but we'll see when we get to 7 a.m. In the S&P 500, the market also falling sharply, nowhere near those all-time highs now. If we just drag the chart across, we go back to the start of that last move, which was May the 31st. Prices at 89% retracement. It was drawn from there to there and then projected down, and then we've got 5,191, so 5,200 really is going to be the area where that market will need to hold. In the 30-minute chart, prices following Japan's cue, they're already through on the futures, through the low of Friday, and the S1, and just going through the psychological level there as well of 5248.5. Again, you can see the market's reaction to the non-farm payroll numbers during Friday's session, and then overnight the market's gapped. Now this gap hasn't been filled, which is interesting. So I've seen this so many times where the market has called panic only to see it on the Monday reverse and trade all the way back. So trade what you see, not an opinion of what's going on around you. In the FT 100, prices also selling off there as well. A breakout that it tried to put in has failed miserably, and now we're heading down. And also, if we were to draw from here up to here, you can see we're sitting on 89% at the moment. See if this area holds. If not, then we've got a situation of trading down to the 8,051. And in the 30-minute chart, you can see there the decline in the last few hours as the European markets wake up and see what's happened in the Far East and are moving lower. Same on Friday with the non-farm payrolls as well, also affecting stocks in Europe and in the UK there as well. So we've already looked at the US dollar. What's happening in the metals? Well, silver didn't do a fat lot on Friday, and overnight the market was slightly weak, but now it's trying to find some support. 30-minute chart there. It's classic, let's sell the futures with the non-farm payroll numbers, and also overnight they managed to crash it once more to get out of any shorts they've got. Market up, but already starting to move lower there. So expect the low to be retested today. Any sell-off in the stock market will drag silver down, not necessarily gold, but it will silver, because they think, we don't need as much silver for production, we've got a recession. So the industrial side of silver comes under pressure. The bankers use this to keep the price suppressed, and that's precisely what we're seeing there at the moment. In gold, still close to the all-time highs, and in the 30-minute chart you can see, despite being ramped lower, market finding support in the 200 MA twice, and off there, even though it's pulling back a bit there towards the close. So let's have a look at the gold-silver ratio. And there you can see exactly what's going on. Silver getting hammered, and prices showing it there in the gold-silver ratio. Heading back to that 88 that I've spoken about for the last 2 weeks. That's where we're heading. Possibly do that today as well, with any major breakdown in the price of silver. Overnight in the Far East, 31.73 and 28.95. So again, you'll see that the spread on the difference there between the paper silver and the physical. Right, let's have a look at Friday's trades. And starting off, the market was already under pressure, and then we saw prices move lower. Got out of this one too fast, and then prices decided they would move lower. Should have just kept the stop at break even, but not to worry. There'll be plenty more opportunities. As I always say, market trading down to the S1. That you can see there, then getting back to the 20 bar moving average, and then continuing to move to the downside once more for a few bars, and then reversing up to the 50 EMA, and then a bit more selling out of that one. Got that one right this time because the market had moved back up from there. You can see the support across there, got resistance across there, and then prices moving sideways with a sell that failed, and then a buy that worked and continued to move there a bit. So profits on that one, helping to make up the first trade, and also the loss on the third one there. It was the third one, wasn't it? Yeah. So prices then waiting for the non-farm payrolls. They came out at 114,000 that we saw. The market didn't like this, and then markets sideways, and then we got into the afternoon session. I wasn't at the desk, but we can see there we spiked up to the scalp, and then again to the scalp, and then prices sideways. There was another potential trade there, but the market reversed, taking the stop out before the entry price was hit. and finding support there, which you can see, until the Dow moved lower and then dragged the German DAX electronic session down with it, but then started to recover as it went into the evening there. So have a quick look at overnight, see what the markets are doing. As far as the 2 minutes concerned, we've broken the 17,400 at the moment. So in that daily chart that we looked at earlier, and just have a look in this one, this is for the basic setup, you will see that we've gone through that level. So yeah, down to the S2, market's finding a bit of support there at the moment. Again, coming back through that 20 MA prices, then moving lower there once more. Okay, let's see what happens today. There's the economic news for today. While I'm thinking about it, let me just go back to that. And we haven't got a great deal this week. We've got final services PMI, but I don't think the market's going to be too concerned about that one, to be honest with you. And we've got ISM at 3 p.m. It will have... take note of that one. It'll have an opinion about that. But for the rest of the week, we haven't got a fat lot at all. It's very quiet this week. Tuesday, GBP has got construction PMI, 10-year bond auction, unemployment claims, and 30-year bond, and that's it. So not a lot on the news front. So it's going to be down to whatever happens in the Far East, in Japan, geopolitics, and the war machine in the Middle East, and whatever's happening in the US with regards to there's a prediction at the moment that they're going to decrease rates, cut rates in September, but we'll just have to wait and see. But that might that rumour may continue to spill into the markets and bring a bit of more volatility. Right, that's it for this one. Have a great day, and as ever, thanks for watching. See you in the next one.